Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. We made it to the end of the weekend. What a week. What's going on in the markets today? We're getting this short squeeze. Dow's up 650 points. NASDAQ up 150. The S&P is pushing towards the 4,300 level. 4,300. That'd go back to last August is the last time we were at that 4,300 level. Now, the first half of the year has come to a close, right? And what a first half of the year it was. Look at the NASDAQ, the QQQ's up about almost 30%. The S&P up about 10%. The Dow was kind of a little bit flatter. But right now, we're getting this short squeeze pushing the markets a lot higher. Now, what gets me excited about this short squeeze is the VIX. The VIX is down below 15. 15. I mean, that's like everybody is not worried. There is no fear in this marketplace whatsoever. We passed the debt ceiling. We got an unlimited debt ceiling. We're going to print trillions of dollars. The market's going to skyrocket, right? Not my take, not my take. I know we're pushing higher, but I think this is an opportunity to the downside. I think this is the opportunity for the short positions to come on and push this market lower. Now, the reason we are getting a short squeeze is we had too many people trying to short the market, and they're getting squeezed out of their short positions today. And that's all right. That's okay. That happens, right? All right. So I'm putting more money to work on the short side. I think we're going to come lower. Now, a lot of people think this is the new bull market. They think there's this AI, artificial intelligence. It can push this market higher. You see, that's where I'm having a little bit of problem thinking that we're in a new bull market, because it's really only a handful of stocks that are responsible for this rally we had in the first half of the year. Now, we're on pace to do 60% up for the NASDAQ. Well, we've done 30% in the first half. If we do another 30% in the second half, we'd be up 60% on the NASDAQ. I don't see it that way. I see it coming back down. I see it coming all the way back down, full circle down to those October lows. I see the S&P coming back down. S&P, I think, is going to come down to 3,400, which is quite a big drop from here now that we're at 4,300, dropping 900 points. And he's going to do that all in the second half of the year. Now, that's just my take. A lot of people think it's just going to continue to run higher. A lot of people think it's real estate market's just going to continue to go up from here. I get the comments in the section all the time, and that's perfectly fine if that's your viewpoint. That's not my viewpoint. Now, we're getting some heavy hitters in the housing market saying that it's going to be a bloodbath. I saw an article from Barbara Cochran. She thinks it's going to be a bloodbath. She thinks a recession for the real estate markets here, and maybe it turns into a depression. Elon Musk. I don't know what makes him the expert on the real estate market, but he's calling for this crash in the commercial side first, followed by a crash in the residential side. That's Elon Musk. He's a smart guy. I kind of believe him on this. Well, I definitely believe him on the commercial side. Everybody believes the commercial side. Why do they believe the commercial side can crash? Well, because it already is crashing. We're getting 70% vacancy rates out here in San Francisco and Los Angeles in these big high rises. And who's defaulting? It's not mom and pops that are defaulting. It's the BlackRocks. It's the Blackstones. They're handing the keys back to whoever's holding that paper. And you know who's holding that paper? The banking system. I think the banking system's in big trouble. I think the pension funds are holding some of this. The insurance companies are holding some of this. You see, the commercial properties are crashing already. So people believe that, right? That's easy to believe. But to believe that houses would go down, nobody believes that. They tell me it's ridiculous. It's impossible, especially in your area. Your area only goes up. And I get that. You live in this great area. I mean, there's going to be no one getting laid off in your area. It's going to be fabulous. And we had good jobs numbers coming out again. The unemployment rate is down around 3.5%, right? Very low, very low. I actually think they were going to see a spike up in unemployment rate. I think that's going to spike up to about 10%, 3.5%, Mike, to 10%. Really? You think it's going to get that bad? I do. I know. It's unbelievable, right? It's shocking. I think it can easily go up to 10% unemployment rate. And actually, I think the numbers that they got right now is not an accurate number. I got a lot of people out of work right now in my area. I live in Silicon Valley and we get those tech layoffs, but this 3.5% unemployment rate, I guess was 3.7 to be exactly accurate. Today rose up a little bit, right? Okay, well, I think it's going to get to 10%. What else do I think is going to get to 10%? Well, I think inflation. I think inflation is going to pass 9.3. I think that's going to get to 10%. What else do I think is going to get to 10%? Well, I think mortgage rates. I think mortgage rates are going to get past 10%. Look, they're above 7% right now, and that's if you have the 800 credit score. The 800 credit score, that's above 7%. What if you don't have an 800 credit score? You're paying up around 8% already, maybe even a little above 8%. That's crazy, right? Okay, so I think mortgage rates are going to go higher. I think they're going to get to 10%. This is just my take. I know a lot of people don't believe this. A lot of people think that I'm completely crazy. Well, look, you got a situation here in the real estate industry where it's just contracting. Now, Redfin came out and Redfin said that we contracted. Now, it was funny. It wasn't year over year. It was the week last year versus the week this year. And the number of transactions were down 45% down. I mean, that's just like a frozen market, right? It's just freezing up in the real estate market. Here's what else is going on in the real estate market. Real estate brokers, real estate agents, they're getting out of the business. How many are getting out of the business? About 10,000 to 15,000 a month. That's a lot of people fleeing the real estate end of the business. Why are they getting out? Well, they can't make any money. Nothing's selling. It's frozen over now, of course, in your area. Everything sells, but no, it's really not working that way. We're at a standstill. Look at, I don't think people can pay these high prices anymore, so they've run out of buyers. Now, granted, the sellers, they don't want to sell. No, I'm not selling. I'm waiting to get the price Billy Bob got. Until I can get the price Billy Bob got, I'm not selling. Now, that's fine. You can sit there. You can watch your house go underwater. You can watch your equity disappear. You're going to get negative equity if you stay too long. Now, a lot of people say, I don't care if my house goes underwater. I'm never selling. I'm locked in at 2.8%. I'm going to stay put. I don't care if I'm $1 million underwater. I'm locked in. I'm not going anywhere. I'm never selling. And that's great for you. That's fabulous. I believe that you should do that. But look, I just want to talk a little bit about how bad things really are. Now, how bad are things out there right now? Look, they're celebrating. They're celebrating this debt ceiling bill. It got passed, right? Okay, now what they call this thing? Let's start with Chuck Schumer. Okay, Chuck Schumer, he came out and said, America can now breathe a sigh of relief because we're not going to default. Isn't that great? Don't you feel better now that we've risen the debt ceiling? Well, actually, we've taken it away. We've suspended it till the next presidential election. They had to suspend it. Well, they could have voted to raise it $10 trillion because that's how much money I believe we're going to spend before the next president takes over. Now they're saying, no, Mike, you're wrong. We're only going to spend $5 trillion. And that's great, right? Okay, we're only going to spend $5 trillion. Maybe it's between $5 and $10 trillion, but you couldn't raise it that way. You had to give it a good name because otherwise people wouldn't vote for it. What name did they give it? They called this the Fiscal Responsibility Act of 2023. Do you feel that the government is fiscally responsible with your money, with all the tax dollars we give them? I don't feel that way at all. But that's what they called this bill. They called it the Fiscal Responsibility Act. I mean, this is so irresponsible to eliminate the debt ceiling so that we can spend our way into oblivion. And believe me, we're going to spend. And that's what the stock market's celebrating today. That's what everybody's happy about. That's what's going to keep the house prices higher. Now, once again, this is not my take. I think this is a terrible thing. I think you should vote all these politicians out that voted for this. They are irresponsible with your money. As long as they continue to do that, you're going to see the inflation in the grocery store. You're going to see the inflation when you fill up your car with gas. You're going to see the inflation when you're paying your electric bill each month to heat your home. All right, well, let's talk about how bad things really are. Now that I got on a roll here, things are bad out there, but we don't know how bad they are. We have no idea. Now, why don't we know how bad things are? Well, we had this moratorium. This moratorium, we call it the eviction moratorium. And then we had this forbearance on mortgages. Nobody had to pay their rent. Nobody had to pay their mortgages. Well, that's starting to change a little bit now. Look at when you went on the forbearance for your mortgages, you got to not pay your mortgage for 18 months. Let's say your mortgage was $4,000 a month. I'm just throwing out a number. You didn't have to pay for 18 months, so you got to skate. What is that? I mean, what is that? About $70,000 or so? Okay, so you don't have to pay $70,000 because you got to skate for 18 months. Okay, so 18 months went by, and now you owe $70,000, $64,000 or something like that extra on your mortgage. Where does that money go? Well, you know where it goes. They give you a new loan. They give you a new loan on the back of your other loan. Now, what's this loan going to be for? It's going to be for about 7%. Your first loan was 3%, right? You're locked in. You're not going anywhere, but you went on forbearance, and now you're paying a 7%. Anyone that went on forbearance, leave me a comment. I'm not exactly sure how it works. Do they tack that money on at the end? They don't forgive that money. I know they don't. You still owe that money that you didn't pay. You just got a little break from paid. It's like the student loans. Student loans at $1.6 trillion. We haven't had to pay on them for 3 years. Well, guess what? That's coming to an end. How bad are things? I'm not sure. Look at these car loans. People paid $20,000 to $30,000 over the manufacturer suggested retail price, and they gave them a loan for the full amount. So now these loans are so far underwater. What are they doing? They're doing car loan modifications. You can't make this stuff up. Oh, you had a 5-year loan? Let me push that out to a 10-year loan and we'll lower the payment some more. Look at this is not going to end well. We don't know how bad things are because there's no price discovery. They won't let us discover where these prices should balance out at, where the stock market should really be, where the house market should really be, where the car loans should really be at. Nothing is balancing. Credit card just went over $1 trillion for the first time ever. This is a big bubble. Why are people paying with credit cards? Look at credit cards are over 20%. My buddy, he just told me he looked at his credit cards. It's 29%, and he's got outstanding balances. He doesn't have the money to pay it off, so he's got to pay 29% interest. Look at this buy now, pay later stuff. It's catching on. It's catching on like growing like wildfire, right? 44% of the people in the U.S. in some form have used the buy now, pay later program. 28% of them have used it to buy groceries. How bad are things really? Look at they're repossessing 10,000 cars a day. Some people say that number's as high as 15,000 cars a day are getting repossessed. How bad are things really? We know the commercial market's crashing. We know the housing market's in trouble. Well, not in your area. Not in your area. The housing market's fine, but how bad are things? We don't don't know. All we know is we're celebrating today because we're going to spend another $5 or $10 trillion in the next year or two before we get another president in there. And that president won't be any more fiscally responsible than this president. You just can't spend your way into oblivion. You can't spend your way to prosperity. This will end bad. This will make the housing market come crashing down. Probably the biggest crash we'll ever see in our lifetime. Stock market's going to be coming down also. Just my opinion. Your opinion, it may be going straight up. Your opinion may be that in your area, houses will never come down. And that's perfectly acceptable. I accept your opinion. I'm just giving you my opinion. Anyways, if you like this stuff, give me a thumbs up. Why not? It's the weekend. We got the weekend ahead. Everybody get out there. Have a great weekend. I'm Tall Mike. Bye-bye now.